Good morning, everybody. Hey, welcome to Friday, September 11th. Do you remember where you were on this day in 2001? I do. I was sitting in my office with the TV on watching CNBC when the news flash came across, watching the plane hitting the tower of the Twin Towers. I hope you'll stop and remember what today meant to us and how you felt and where we've come from for now. And remember the freedoms we have here in our country. Hey, you're looking forward to a great show today. Yesterday was, man, what was it yesterday? Not sure exactly what happened yesterday, but I'm going to dig in, find out, and we'll have that for you here in just a moment. Looking forward to the show today as we wind up this week of September.
105 points on Highlands Light FM. We're at 8:40 now, 20 before 9. It is 9/11, and as usual, we will do our tribute to 9/11 coming up in a couple of minutes. But before that, we need to check in on your finances, and that means going downtown to the offices of Statler Financial Services, where Phillip Statler is standing by. And Phillip, the first question I asked you when we got on the phone was, why in the Sam Hill we go down yesterday? Because everything was looking pretty good, but boy, was it an off day on Wall Street yesterday, huh?
It really was, Dave. I mean, I was surprised and really shocked as midday I looked at my ticker tape and I thought, oh my goodness, what happened? And it wasn't until the end of the day that I really could find anything in writing that gave any kind of indication of what caused it. And it seems to be the only thing that I can link it to is the jobs report. When they dug down deep into that and looking at maybe the U6 report or continuing claims, what that looked like, something in there they didn't really like. And so they started exiting the tech again, which then flew over to the S&P and the Dow.
Kind of a uniform sell-off across all three indexes yesterday. Maybe we were onto something when we looked at the continuing claims and said, boy, we ought to start watching the U6 total unemployment rate. My worry out of this thing is that with all of the restaurants and food service businesses that aren't successfully reopening, that we're building in some structural unemployment that we thought we had whipped for a little while a couple of years ago, but there's a possibility somebody drilled down and saw what my fears were, and there might be some indications on that, huh?
That could very well be. I mean, I think it's interesting. The governor came out yesterday and announced that bars will be able and clubs will be able to reopen on Monday.
Yep.
So that's going to be another data point for us to kind of place a pin in and say, okay, what happens with the COVID cases from that point forward? We've done pretty well of keeping them under control here lately. And so this will be one more data point along with the schools to figure out, okay, can we survive and can we keep going, letting our economy grow with COVID out there?
Yeah, and as happy as I am for my friends in the food service and beverage industry being able to reopen the bars to 50%, I'm looking at it and saying, okay, we really don't have a read yet from what's happening from the schools opening and what's happened off of the Labor Day weekend thing. I'm not sure I wouldn't have wanted to wait just one more week to see whether or not we got a spreader event off of the last 2 weeks' worth of changes before we add one more variable into the mix. But like I said, I'm happy to see the food service and restaurant people being able to earn a living again, so I'm kind of torn in terms of my reaction to that.
Well, hopefully, Dave, they've learned their lesson and that people that do go out to the bars and clubs will be responsible and do what they're supposed to do, allowing the clubs to stay open.
Absolutely. That's the bottom line. Can we behave ourselves now that we've got a little more freedom? Resetting the table, we're talking about a down day. Let's quantify it for a second. Dow ended up down by 1.45%, down 405 points yesterday. Standard & Poor's down the better part of 60. That was 1.76%. And the NASDAQ took a bath, like you said, Phillip, down almost a full 2% yesterday. We're now down under 11,000 on the NASDAQ, down 222 points yesterday. One of those things that indicated something bad was happening, and your guess is that they were just drilling down on the unemployment numbers, huh?
Yeah, that's the only thing I could find and attribute it to.
Huh?
I mean, that big a drop, you have to contribute it to something. I mean, it's just not like there's a breeze blowing and they decide to sell everything off. I mean,
Well,
they had to
they
have
they
some reason.
they have been known to respond to a breeze blowing. One never knows. We start this morning off with consumer inflation, the CPI. Month to month, it wasn't a bad miss. The market was expecting 0.3% on my listing. We ended up getting 0.4%, which, to my mind, at the very least, generally indicates more consumer demand than they expected. And at a controllable level of inflation, I'm kind of sort of considering that good news given these unique times.
I do too, and so the indexes also. They have seen a little bit of a bump since the CPI came out. Now, if we look at core CPI, it was a little bit bigger miss because the expectation was 0.2%, and the core was actually 0.4% also. So, when you look at it from that standpoint, that's a little bigger jump than just the whole CPI.
Understood. Yeah, the total inflation rate for the CPI over a rolling 12-month average is only 1.3%. So, like we were saying the other day, it doesn't really look like inflation is a long-term problem. Although zero point 0.4 every month would be a pretty bad number.
That it sure would. Yeah, we'd have hyperinflation then.
Then we'd start getting up into something we don't want to see. But at the moment,
Exactly.
inflation year over year is not in bad shape at all. Few reports came out this morning. You didn't have the specifics on this, and I didn't see the specifics either. But this was kind of a surprise. Kroger, the big grocery store chain, I did see their earnings per share. I didn't see what was expected, but they reported $1.03 in earnings per share compared to 37 cents 1 year ago. Evidently, last quarter, a lot of people bought from Kroger's, huh?
I guess so, and I'm not sure. I'm looking at an adjust. I did find an adjusted number, and Kroger's adjusted EPS was $3.20.
Crud.
I'm not sure what that difference is, but the consensus estimate was $2.92. So they did beat on that front. The same store sales was a big number. It was up 14.6% compared to 10.5 expected. So that's pushing Kroger's stock price up this morning.
Kroger owns a whole bunch of different brand name grocery stores. The chain that I used to patronize out in Colorado is now owned by Kroger, and they evidently got the curbside pickup routine and the convenience shopping and the distancing in early enough to the point where, compared to some of the other brick and mortar chains, they actually survived against the Wally Worlds pretty darned well, didn't they?
Yeah, they did. I mean, I think Kroger in the north is kind of like Publix down here.
Mm-hmm.
They're the go-to store, and I think that they benefited from this whole COVID thing, just like Walmart, just like Publix. Those guys have benefited because they were able to adapt and make it easy for people to get what they needed.
Understood. You've got more reports I know that came out overnight, and I'm kind of hampered on internet access, so I'm going to let you fly with it for the moment.
Absolutely. So we do have some reports that came out. We got Peloton. Those that don't know, that's the bicycle, stationary exercise bicycle that you can sit there and they have a screen and you can get on classes with other people.
The
But
people
they had
that put out, the people that put that weird ad out over Christmas that got him in so much hot water.
exactly, and so they earned 27 cents a share. That was 17 cents better than expected. And their revenue top forecast, they announced last week that they're coming out with a new bicycle, a new bike, exercise bike, fancier, and they're lowering the cost on the one they have now. So they consider and they think that 2021 will still be another good year for them. Peloton, when we look at where they are, they're up almost 12% this morning. They will not quite, almost open at the 52-week high, but they'll miss it by just a couple pennies.
Cool.
Then we have Oracle, which is kind of a brand name when it comes to technology. They beat by 7 cents a share. Revenue also came in above forecast. Their cloud-based computing and products continue to support them, especially now with folks working remotely from home. They're up about 4.5% this morning.
I see them toward the top of my big winners list this morning. That one I did see.
Okay. Then we have Chewy. the pet company that
Yeah.
you can buy pet food from. They lost 8 cents a share for the last quarter. That was better than the 16 cent that was expected. Revenue came in above forecast, though. They're not sure exactly what caused them to come in better than expected, but hey, people are ordering online more now and comparing Chewy's price with Amazon price. I mean, I know that's what I'm doing
Yep.
when it comes to that kind of stuff. But they're trading down today about 1.8% this morning.
Hmm. I'll give some of the credit for the growth because my cat lives on Chewy stuff. We can't buy her brand of cat food locally, so she eats like a pig, and Chewy gets an awful lot of business.
They do, huh? So
And
then we got the last.
Right up Cal is nice as well.
Yeah, the last one I have is Dave and Buster's.
Okay.
Dave and Buster's is the adult playground where they have bars and video machines and games and that kind of stuff you can play. But they lost $1.24 a share, but that was better than the $1.40 they were expected to lose. Their revenue, though, did come in below Wall Street estimates. They their revenue was 85% below what it was a year ago. Think about that for a minute.
Not a surprise, but that still is really bad news.
They were able to reopen 27 locations during this past quarter, but they're obviously not providing any guidance for 2020. That would be kind of crazy at this point. But they're getting hit pretty hard this morning. They were down 2.2% yesterday, down another 1.2% this morning.
I would say food and beverage, not exactly a favored category for the short term. Setting the table again, off day yesterday in all three indexes, and a couple of the big-time off day yesterday. Given the weird rhythms we're into in the markets, I'm going to assume we're seeing a little green ink this morning. Phillip, how are we doing so far 45 minutes early?
We are seeing some green ink, Dave, and if we look at the Dow, it's up about 1/3%. The S&P 500 is a little over 0.5%. And the NASDAQ's right at 0.5%. So not as good as yesterday, but that may be a good thing. Maybe we won't have the same reaction as happened yesterday, right? So if we look at the commodities front, everything's in the red here. We've got silver down 1%, gold down 0.5%. Crude oil is down almost $1 from where it was yesterday, Dave. It's down 1.2% to $36.83 a barrel.
Well, poop. Overseas markets are kind of going in weird directions. The Asian markets looked at our bloodbath yesterday, and they traded up substantially at the close. Europe's mixed halfway through their day with no real trend indicated. Phillip, this is one of those weird times where advice is always needed, and I know today you got an opportunity for folks to get some advice one-on-one in real time. How do I get online with you today?
Absolutely, Dave. Hey, we're having our Friday with Phillip starting at 11:30. It's a Zoom meeting. All you have to do is go to my website, statlerfinancial.com. Under the events tab, there's a registration link there. You can type in your information, and they'll send you a link to our Zoom meeting. Look forward to seeing you guys there. It's a fun time. We answer your questions, give you kind of a recap of what's happened the last week or two in the marketplace. I look forward to a lot of folks showing up for that. And then if you're interested, given all that's happening, folks should get a financial x-ray, which is a second opinion of your current portfolio from an independent person. That's what we do here at Statler Financial. Give us a call at 382-0037, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on News Talk 730.
All righty, back here again Monday morning with a look at what's likely to affect your money next week as well here on Light. Thank you so much, sir. We'll catch you Monday, all right?
All right, thanks, Dave. You have a great weekend.
Thank you, Phillip. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Remember, if you see this morning, we'll be on at 11:30. All you have to do is go to my website, statlerfinancial.com, under the events tab. Register there. They'll send you a link to our Zoom meeting, and look forward to seeing you there. Have a great weekend, and I'll talk to you again on Monday.